Hey everyone, welcome to your daily update for BTC SOL and market cap. It's a prime day, so we don't have a whole heap of closes today. We've only got a 1 day, so it's probably not going to be the longest video, but what we are seeing is the typical liquidity hunt that comes about quite often on prime days. I've had a couple of questions actually in the comments about specifically what is a prime day, so I might do another just separate video later today on that and put it up. And what is possibly just my tin hat thesis on whales choosing the best times to actually move markets so that they can get their entries, etc. So anyway, back to liquidity. As you can see on the 1 day, we are bearish on basically everything. So people have started shorting. Typical market behavior is people long too late, short too late, and then they become the entry and exit liquidity for other players, basically. If we were to do any kind of sweep just in the short term to the upside, it really shouldn't go past about 110, 112. And if we were to keep on dipping down, then areas like 105, etc., are starting to come into view. And if we went and had a look at SOL on the 1 day, it's still got a lot of liquidity up there to that 220 mark. I actually think they have been basically generating a false double top or triple top, depending on the time frame you look at it on, and trying to get people confident to short SOL. And then I think once everyone is really confident that it's turned back into the shitcoin, because people's opinion on SOL tends to flip pretty quickly, they'll probably blast up through all that. As for the lower levels, or short-term levels, it really wouldn't surprise me if it returns to somewhere around that 206 area. If it does that today, there is actually an exchange native close that could then push it all the way up into the 218 liquidity. So I'll see if I can bring that up on the screen later on. Now, as far as the downside liquidity on the 1 day, sort of anywhere down to that 196, 195 sort of area, but it's kind of running out really. There's not a lot of new longs opening up at the moment, mostly shorts. If we look at the 7 day, 7 days is still pretty bullish on SOL, and it's very bearish on Bitcoin. So yeah, they can keep driving the price down, but ultimately it'll revert into where the liquidity is. So whoever is selling here, someone else is buying it, and then if they were to push that up, they'll take it to those areas where the liquidity lies, so that they can sell it off and then start the whole market cycle up and down again. So we've sort of got up to about 117k on Bitcoin, and down to sort of around that 106, 105 sort of area. So there is monthly Confluence and coming down to 102. There's targets down to 95. There's all that kind of stuff in play, but it's just does it do it now? Does it do it later? With SOL on the 7 day, the clusters are quite obvious, so it's anything up to about that 214, and then the next one is sort of anything up to about that 220, 221 area. Sorry, and I missed the one up to about 208. So there's like almost 3 very defined blocks of 7 day liquidity, where people have started to feel comfortable taking out their shorts. The thing is that some of these higher ones, they're not really going to be trapped, and the price would have to move up pretty quickly to trap them. So it's more likely it sort of only takes the first block, has a bit of a pullback, people still feel comfortable, it builds what it needs to bridge the gap between sort of 108 and 210, and then it can push through that quickly to trap the next block. If it keeps going to the downside, then the 182 area, sort of anything really. We've got some actual reasons to bounce around 191. And reasons to target 191, and we've also got reasons to target 182. So it all just depends on how much further they keep diving down, how greedy they are with where they want their long entries. And on the 30 day, definitely everyone is bearish on Bitcoin on the 30 day, regardless of what you see on crypto Twitter about ultimate new highs. The liquidity chart says it all. People are shorting. And there isn't, again, much reason to go down past that sort of 104, 105 area at this stage. So it's kind of due for a little bit of a move back up, just to, even if it wants to go down, because if it wants to keep going down, they're going to want to get liquidity in those areas. So having some kind of little move up, even if it's a fake pump, is really what's required to make it worthwhile going down. Otherwise, they might as well just short squeeze through everything and go straight up to 220. Sorry, 120, 220. Wouldn't that be awesome? Now, as far as SOL goes, it's been very bullish because of the way the price action is. So you can imagine there's a lot of 30-day longs, and if they were to take all of that, most of it's gone. Big clusters are gone by the time they get to about 194, in that low 190s, and then down to the 180s, etc. Maybe if they want to get real greedy, and the clusters again are quite obvious when you look at the upside, up to sort of like 206, and then the next cluster is sort of around that 209 to 214, 215 area, and then sort of around that 217 to 221 area. So the liquidity is kind of all in the right places to match the structural moves that are in play, and really it's just a time thing for that to be taken from one place and deposited in the other. So let's just have a quick look at short-term liquidity. I think if it refreshes, I've got way too many tabs open from yesterday. So as you can see, it's pretty slow to update at the moment. So the short-term liquidity is showing that if they can push up past 111, they'll probably be able to squeeze all the way through to sort of like that 117 area. And if they want to keep going to the downside, it's going to mean really they should be trying to build up a bit more. So it's just like we saw on the charts or the liquidity heat map just before. There's these big gaps sort of in the short-term liquidity between 105 and sort of anything lower, so 103, 104. It would make sense for them to at least go sideways for a bit and get all of these gaps filled before they go one way or the other. But given it is a prime day, they are going to run out of time because as of tomorrow, there will then be structural closes. So it's to either just dive all this by pushing it down, which wouldn't be super efficient, but if they did it in the next 24 hours, then they can come back up without creating any real structural changes. Or do we actually stay here for a while? And that's actually kind of bearish. The longer we stay down, the more likely it is that we actually introduce structural changes that affect the long-term price action of Bitcoin. As far as SOL goes, same thing, but it's got a little bit more liquidity, so it could push up a bit easier. But yeah, it's all just kind of ranging. Really wouldn't surprise me if we do get a little bit more sideways. Okay, let's have a look at the one-day charts. So SOL Strength. So it closed over the trend yesterday. The trend therefore moves from where we had it there marked on the chart up to here. And we opened on the underside of it. We opened just above the break level. So yesterday we had sort of that little period of bullishness, and that was just it bouncing between where the trend had moved to and where the break level was. So we were in that little wedge there for a little while, and then the trend has basically rejected and it's pushing the price back. So we're just looking for this pretty much to hit the trend, the uptrend, and see if that supports it, or we're looking to see if it hits the next level down around 17933. Failing that, if it doesn't, if it stays where it is for the next 1 hour and 47 minutes, then what it actually does is makes another trend. So which runs from, I think I've got that right. It runs from there. And it could open on the wrong side of that, push down, bounce back up, or it could push up a bit before the end of the day and then open up and bounce off trend and go up. It's sort of just really in that limbo state there. If it does create that trend and opens on the wrong side of it, you might get a push up, rejection, push down. That would actually suit some of those liquidity blocks that are quite close to where the current price is. So maybe they do go up a little and then down. Either way, you've still got the support down here at around 18345. You've got more support down here at 17946. It's just that whole level's gone now. And then you've got even more support down here at 17162. SOL is bullish. Long term, SOL is bullish. So how many times am I going to say that? And just looking ahead to the weekly, we're still above the weekly range trend. So as long as we stay above this, open the next candle, we can bounce off that and then head up to those 120s. So that's looking really good. And on the monthly, we're still above the monthly range trend. So we want to stay up here. And if we stay up here, which is sort of above that 17770 area for the end of the month, then we can go up. What will ultimately happen if we stay here is we will most likely bounce off the trend and the break level. The hold level up above here will get hit. That'll reject, and that could all happen in the first few days of September, and then everyone will start screaming about how September is Rectember and it's the down month and all that kind of stuff. But it's just looking like it wants to open in a position where it can create that almost price action to suit the narrative, really. But yeah, that's so. We'll keep an eye on that. For the first few days of September, we might go up, bang, down, and then up again, or we might just open, go down, then up. It's but one way or another, they are going to become those sort of key levels to have their little bit of a fight. Dominance of safety assets in Bitcoin. It actually looks like it might close up on the daily today and create a hold level to bounce and try to get through the trend. So this is the first thing that is implying that we might see another little pullback, maybe one more day. And then you've got the 3-day close, which is going to come in a couple of days, but the 3-day close is still under its resistances. So you might get 1-2 days more push out of this. So if it closes up over 64.53%, like you can see how the hold levels bounce, like this one back here, which created this bounce here. It looks like it might try to create another one in there. And if it does, you might get a little bounce. But it's also got this resistance really close. So, and it's not a hard close or a break of any of the trends. So it might just push up, give you that little bit more weakness, one more day of liquidity sweeping and grabbing, and then down. So that's possible. Now, of course, if it retraces before the end of the day, so 1 hour and 43 minutes to go, then that hold level doesn't get created. Throw that thesis out the door, and the price can then just reject again off the backside of these trends and go down. So that's what that's up to. Let's have a look here. Yay! Finally, we got our 108 350 level that has been haunting my dreams. Price just had to return there if we wanted anything structurally to be sustainable to the upside. Also, just like on our daily distribution cycles, you know, we're not that far through it yet, so we shouldn't really be expecting a reversal. So we had 1, 2. Was that one? I don't think it was. No, that was not a break of trend. So we had 1, we had 2, and we had 3, 4. So we've had 4. So what we want to see one more break of trend, and it can be an interior or an exterior break, and then we want to see it get past this exterior. And once it does that, then and really only then, it's also helpful if we get the trend shift from here, which is above, to the bottom, but it doesn't matter too much because it's not hard closed. But yeah, then and only then should we realistically be expecting to see a reversal in the daily price action up to the higher targets which are in play. So that's pretty much, it's really a nothing close. We're closing under levels, but we're not hard closing under levels. So at this stage, it's really just a liquidity sweep on the daily. And there is a daily hold level down here at 107, 105.9. So I might look to take some scalps on that. And I really like this level down here at 102, just because it is the monthly retest of its break of range. So the only thing I don't like about it is that we end up under the weekly breakout level. So I'll just flick that across to a weekly chart for a second. But this is the weekly breakout level here, which was why we were expecting this retest, because we hard closed it with this big tall candle, and then coming back down to retest it is a really high probability. It just took a bit of time for positions to get unloaded, etc., by the major players, and then rejection, down we come. So the thing I don't like is that we don't really want to start a week on the underside of that, because it's a really polarized level, and you can see what happens here with these massive move to the upside. That same thing can happen to the downside, and we do have those targets around that 95k mark and even some lower ones. And if there is ever a level to not want to be under in 2 days, we don't really want to be under this. It doesn't technically, because it's an origin breakout level, it doesn't need a hard close to react. Like they can just go. So yeah, and we've seen these levels do some pretty funky stuff before. So if you look at this candle is one, and it was where was it? It was that level. No, it wasn't. It was. I'd have to find that now. Actually, yes, it was that level, I think. Yeah, it was. It was that level. So you can see how they just absolutely dive and then they fly back up again. So you can see that kind of thing happening in reverse if, particularly if we close under it, because even not a hard close under it, sometimes you just get a lower time frame close under them and they just pop. So very polarized moments on the charts. So yeah, we don't really want to stay down there for too long. So let's have a quick squiz at just some of the other short-term levels. Yep, so we're in our front side area. Trends not getting broken. Got a couple of days to go back up. If we stay down here too long, then any of the long positions, I'm just going to look at taking parts off them when we hit the backside of these trends. But that's looking pretty normal. And we've finally hit the range trend. So that closes in 2 days. So that's about the monthly close. So we're under all the levels, but having hit the range trend, this should be traveling back up anyway. So yeah, it all actually looks kind of like it's trying to be scary, but it's really not that scary. Price action is just doing its pretty normal thing. So the daily close on SOL, this is kind of on the fence. So it's pushed down off a couple of break levels. It's gone back below the trend. It's sitting below the range trend. And if it closes under 202.923 today, it'll create this hold level in here. So this is kind of what it's playing with. It's sort of trying to create a hold level. And if it does, that hold level can reject and send it down to try and attack one of these other trends. And that'll get you to your 196 areas or your 195 areas quite easily. So that's pretty much what it's up to. So I'd say, yeah, it all comes down to really what they do in the next hour and 37 minutes with that one. If they take it back up above these trends, it'll bounce off the backside of those trends and just go up. And if they close under that level, it'll go down. And sort of what's kind of fake bullish behavior would be if it closes up above these levels. Fake bearish behavior. If it closes up above these levels and then goes down anyway, then that's just liquidity sweeping. Because if you want to create structural resistance, you'll engulf that candle. It'll only be 1 day structural resistance, and it'll only need a 1 day trend or a 1 day break level or something to push against it. But that's the level I'm watching there on the 1 day, which is 202.923 for close, above or below. And the other one, just that I had an alert on the other day, is pretty much a swing trade opportunity on SUI. So this alert went off this morning. The entry, so this is a lazy swing trade entry, so we may go lower, but looking at an entry here, which is that 3.2424 level, which it's consolidating on now, and if we do get this second day pullback, etc., that might happen on BTC tomorrow, and therefore SOL and the rest of the market as it follows to some degree, then we might see this sort of $3 area down here, which is going to be the trend. And there's also a range trend that's never been touched all the way down here at about 2.6. So watching these levels, I've already entered some position here, which I'm going to look at TPing at 3.82, 4.3, and then 4. Or then at the trends, depending on wherever the trends are, but they're kind of sitting up there at about 4.5 and 4.8 at the moment. And yeah, it may just go. So we've sort of had BTC rotation into ETH, then we've sort of been seeing ETH rotation into SOL. So it wouldn't surprise me if we start seeing some rotation now into the strength of things that are smaller. So this could be the start of that on a monthly. And you don't get too many monthly hold candles. They typically always play out. They can take a long time. But yeah, that's just another little trade going on at the moment. Just for a bit of safety and backup, this is the weekly. So if we get we've got this really old range trend that's coming through here from July in July 2024. So if the weekly closes under this range trend, which you can see I've anchored it just down here, just for your reference, which is the Monday, the 1st of July candle and the 22nd of July candle. So if we close under that in 2 days and 2 hours, I'll just look to take the position out when it hits the back of the trend, if it just does a retest on the back of the trend. Otherwise, all of the weekly levels are basically confluent with all of the monthly levels, so there's a great reason for it just to travel up from here. So just something a little bit different there. And I think that is pretty much it, other than what I did want to show you is just how you can get differing. So sometimes you'll hear me talk about so prime days, and I'll do a video on prime days with a bit more detail, but sometimes you hear me talk about exchange native engulfment. So a lot of structural change is about when price engulfs price. So we're in distribution, and then we've outpaced it with accumulation. So therefore, we're going to get some kind of price move. Like there's a lot of stuff is just about engulfments, and but the interesting thing is when you look at the dates. So on the BitGet chart here, this candle opened on the 28th of the 8th as a 3-day candle. If I look at it through their native platform, if I switch it over to the TradingView feed here, the same candle opened on the 26th of August. So, and regardless of that, if you just look at how this 3-day actually looks here, so these last 3 candles, so 1, 2, or maybe let's just take a snapshot of, let's just take this. Okay, so we'll take that, and I'm just going to park that on the screen for a sec. So first of all, depending on what I choose, I've got 2 different dates for when candles open and close, which is the first thing that is very strange. And you'll find that the reason why daily, weekly, monthly moves tend to be more reliable is because they are very much standardized across all platforms as far as where they anchor beginnings and ends. but it's not to say that there aren't moves happening on other time frames based on different anchors. So now that you sort of see that structure, and then let's go back and have a look at, say, what a 3-day chart looks like on SOL, and let's bring this back over. And as you can see, they're very different. Okay, so we have this 3-day support in here, which is Confluence with a touch of the range trend. So this was a scalp, which you could take for a few dollars when the price hit the back of the range trend here. But we've also got potentially a 3-day engulfment happening today if we close over about 206 based on a different method of anchoring a non-standardized time frame. So sometimes when price just runs off, and if you've been following my videos and you're looking at how we look for our entries, how we look for judging the direction and our levels, the 1 day, the 1 week, the 1 month stuff, anything in, within the day is all very, very standardized. And but when it comes to the multi-day stuff, you've got to, I guess, know that there's different anchoring on different platforms, and therefore, depending on where people are trading, where money comes in, someone might consider that based on BitGet, if you go, so a whale who's using this anchoring may decide that if we actually engulf this distribution, then it's worth going long because the buying pressure has outweighed the selling. Even though on the TradingView platform, which is heavily used worldwide, that same decision would be made to go long at this point right here, which is this bounce we're getting, that we're going through now. So yeah, so if you hear me talking about exchange native anchoring versus TradingView anchoring, that's what I'm talking about. Totally different looking structure on some of the non-standardized timeframes. And yeah, hopefully that explains a little bit more of my crazy talk. All right, take care, all that, and yeah, we'll see you on the next one. Cheers, bye.